365, shake my hand and welcome to another video, another analysis, short form analysis, but from the beginning of time of every single asset that we want to trade in the year 2023. We're going to be looking at them one by one until we start our war rooms in the middle of May. So I can really draw a massive table. By the time I'm done, you're going to see I'm going to do a sequence alignment table for you guys to understand where these things stand. So we can see, what positional swing and maybe short-term good trades we can pull out, right? So in front of us today, or the next chart on my list, is AUDUSD. Just in case you've missed it, I've done Euro USD, Pound USD, USD JPY, USD ZAR, Euro ZAR, USD Swiss franc, and Euro pound. And today I'm doing AUD USD. So you need to catch up, make some notes in your trading journal, start to mark up some zones, start to think about your pending orders. All the information I'm giving you can actually affect your day-to-day intraday trading, right? For as soon as right now, to be honest with you, because trust me, the trade is your friend, but you need to understand in what part of the sequence it stands from, right? And how price is moving. Okay, so, once again, by the way, if you're new to this and you don't understand, I've been away for 90 days, practicing 90 days of silence, of inward reflection, and all sorts of good things. Intermittent fasting, meditation. I'm really, really feeling, 1,000% rejuvenated. But during that time, there was no work allowed, right? So there was no work done. But if I'm in any trade and I'm managing any positions right now, it's fundamentally because during our war rooms together last year, we agreed on significant things and we marked our charts up and we put in good pending orders and we simply waited for price to come in. AUD USD is actually a brilliant example of that, right? So AUD USD, and this is, I was like surprised because I think we hit 1:3 yesterday. Okay, well, 1:3 yesterday and today, basically, in terms of risk reward ratio, but it's been falling nice and slowly since, I guess, February earlier on this year. But we marked this out in our war rooms last year, right? We had a pending order and a pending order there, right? You can even see my notes are still there. So for today's video, folks, because I'm actively involved in this trade, I will not be marking up this chart. We're going to go start our analysis all over again on a different chart until I'm done. This is not where I want to buy, just so you're aware. It's marked gray. It's pretty much where of it, but I've also locked profit above this white line, above this supply that price was trying to rally towards, and actually price hit the supply here. So this is where my stop loss to protect profit is right now, right? But this is not where to buy. So if you see my chart now, we can talk about buying here today. This was the zone that's opposing my sell movement where I wanted to take profit, which is going to give me a safe 1:5, 1:4 type of scenario. We'll see where price gets to, right? But I'm hoping next week this continues to on the downside of things. Obviously, this is me relying on a soft dollar. Soft dollar seems to be the theme of 2023 and right on, right? Clean breakup structure. Markets move up, markets explode right on top of a demand breaks trend line, price goes crazy. No supply on this type of breaking is done. If you do that, then you immediately refer to a controlling supply or a controlling demand. But let's talk about controlling supplies, controlling demands from a higher time frame. I talk fast. It's a bad habit and a good habit. You just take it how you want. Let me know in the comments down below. I'm out of training. I haven't made educational videos for almost 4 months. So, I need that feedback. I am not fragile. I'm not built fragile. If there's something I'm doing that is hindering your education, let me know. I will not take it personally, but I'll most likely strive to improve. Otherwise, if you like the video, hit the like. That's also important. Really, really, you have no idea how I realize how important that is to me. Like, okay, cool, they like the stuff. Let's keep making more. Oh my God, they wanted a new site, a new courses, but they didn't even bother to enroll. It's wild. Like, it actually affects me. So please do your part, whatever part you have to play in this. And right now it's just liking the video, commenting or sharing or subscribing, whatever it is. Right, so I'm looking at Euro AUD USD from the beginning of time, as much as the data can give me, which is 1971. On the Bloomberg terminal, I can go back as far as like the 1940s, by the way. Right, the Bloomberg terminal is quite expensive, but is absolutely important to kind of like to have. Right, so we have here AUD JPY on the 12-month chart. What does this mean? It means one candlestick represents 12 months. One candlestick represents 12 months of trading, or basically speaking, 1 year of trading, so to put. Right, and that's kind of like how you really want to be thinking about when you're looking into who is controlling price and from what type of direction or speed. Right, so we can see that markets for a very long time have dropped, but finally came to their senses in 2000 was the early boom crisis, by the way. So I'm assuming somewhere here is the 2009 2008 crisis. Right, there we go, where there's this little peak and then price comes back all the way down, and I'm assuming there's another crisis, 2020. I've just shown you 3 crises where markets have turned. 3 crises used as turning points. What's AUD? AUD is an Australian market. It's a big trade export-import market, very much big also on the trade of gold, very much big on the Chinese export-import markets, right? And every time there is a massive crisis, there is a turning point. It just depends on what's affecting what the sentiment is, right? Interesting stuff. At least I think it is, right? Markets came undoubtedly to make contact here on what is a very sketchy demand. Let's zoom in a bit before I dub it sketchy. Likable. Why don't you look likable? All right. So there is a bullish engulfing pattern here. Right, so up a bit, and then ever since then, prices started to come back down. Why, Leroy? Why is price coming back down after hitting a 12-month demand? Because price fell into a 12-month supply. We got to pay attention. When we pay attention, we get paid. When you pay attention, you get paid, right? So, oh my goodness, you put that on a t-shirt, right? Yeah, I'm gonna trademark that, so please don't even bother trying to steal it. It's my idea. When you pay attention, you get paid. Right, so there was a supply right there on the 12 months chart, which is very important to acknowledge. And this supply, let's mark it yellow so that we absolutely are on the right track. Right, the supply here then currently decided to push price down, which is interesting. Right, there we go, and that's why price is falling. Full stop. Why did price go up? It hit a demand. Why did price fall? It hit a supply. Keep it simple. Right, so we've got a fresh touch here, so we could get a retest. Right, which would be interesting. Right, wouldn't that be interesting? That would be very interesting. We get a retest here, but this is a 1-month chart, so this could take forever. We're literally going to get the completion of this candlestick this year in 2023, and then we're going to have to wait for another candlestick next year in 2024, and that other candle 2024 could be coming down right now. So let's just keep digging with our analysis. But now we know how big our playground is. We've got a demand that's not yet broken. We have a supply that's not yet broken. Now we're going to go to the presidential time frame, which is a 3 months channel. Remember, banks think in 3 months, take profits in 1 year, in a 10-year span, and that's what we really want to focus on. I'm going to start to narrow down our areas of value. We've got dumb traders base, right? Drop base rally, supply demands fundamentals, which we teach a lot on in my module 2 when I teach you my traders edge. Drop base value, that's the simple formula. If I you can see that for a very long time this has been a crucial line of defense since 2015. The sell supply area is the only thing multiple times from going sky high. If price was to be allowed to go sky high in 2024, 2025, we would see us pushing all the way to these levels here. But since 2015, right, and I'm assuming 2025 would be the end of that crazy cycle. But since 2015, there really hasn't been much, leniency, right? The suppliers battered and pushed price down. In fact, we can see here when we look into our current leg of where price is right now, markets have decided to create a bandage or add extra sell power. We are low on the curve, sure, I'll give you that, but don't forget this is a sell profile asset, right? Remember we looked at it on the 12-month time frame. This is a sell profile asset. We expect to see supply back up supply. We expect to see sell pressure in the long-term run. We expect to see break of structure. To the downside, we expect to see smoked demands, right, over time. We expect to see weak setup demands like this where the imbalance is interrupted, right, because markets want to drop. That's all they know, right? And if we were to be adventurous and let's say we draw a presidential Fibonacci and clearly it's a seller, and we want to know what was going on here, right, on this break of market structure all the way across this white line. Was this a valid Fibonacci level? My guess is yes, without even having to draw it, but let's find out. Let's find out if it was a PCP or even a 50% golden ratio confirmation. I'm going to draw from the highest point of the chart to the lowest point. I'm drawing top to bottom because I am a seller, and woo la la, welele, whatever you want to say. It is a golden ratio supply. It's golden, baby. And if you know these things as a positional trader, I've got, well, now we've added one more, right? So we've got 13 traders on the floor. One of them was, in training for almost 18 months, but he's quite excited, right? So we've got 13 now. I now have 13 floor traders, and about 4 of them are positional traders. The rest are position now, and then 4 are swing plus me. That makes 5, and the rest are day traders. But if I was to try and push my positional traders, this is what we look for. This is what we want. We want to start to sell here, and then we don't want to let go. We really don't want to let go. And the trend has not been done since 2011, right? I wasn't even trading back then, but I'm simply saying this is how you can have money in the markets working for you. I bumped into 2 painful stories, 2 old people that who spoke to our hearts with me and my partner. We had to get involved in their lives, but they have no pension. 65, no pension. 65 and no pension, right? Use these markets to invest long term. I'm telling you that price has been going down since 2011. Right, there's never been a single stop loss if you sold at the right time. Prices, all it's done is accrued pip after pip, dollar after dollar, cent after cent for you. Much more better returns because you've leveraged than any bank in the world. Much more better returns than your newer bank or your older bank. Right, markets are good short-term financial resources, but also long-term, right? If you understand the trends, if you understand how price moves, right? So we've got supply upon supply on the presidential chart. I'm going to move to the monthly time frame. I was just proving a point there with the Fibonacci long-term analysis wave and why it's important to do this and why it works. You have to see it work so you can do it for yourself. Right now I'm on the governing time frame, the chart that really controls things. I'm going to assume this is COVID. Yes, it is. This is 2020 COVID. We remember these areas of value were quite significant in 2020 and last year to trade for retracement and rebounds. And you can see that in 2022, price finally came back into this demand. This was the recovery demand, the COVID recovery. I spoke a lot about this with Euro USD, Pound USD, AUD USD last year, that look, watch out for these levels. But I think we also saw some of these levels break, right? So one would say, well, Leroy, there was a bullish engulf pattern underneath there. Zoom in to see this COVID demand. You can see it breaks through the first layer. Let's delete that. Right into a lower demand, which is basically module one, and it's happening in the governing time frame, right? Once again, that you bought here 2 years ago, like we did. Now, this we did do on YouTube. This we definitely did too. Look at this. This is clean, good, long-term money. You don't worry about your stop loss. You don't worry about being stopped out. You just worry about being panicky and closing before the trend has even begun. Some of you can hold the trade for 2 weeks. Good for you. There's still more money on the table if you're a swing trader. All right. But each to his own, I guess. I can't keep saying the same thing year after year. Right. But we do know that at some point in time, let's pretend here, right, that there was a new demand that was formed as price was running up, given this beautiful imbalance. And markets came to that last year. And so now we've got a 3-month supply on top of a 3-month supply. And now we are learning that our supply, these are nested zones. Nested zones perpetuate trends like you've never seen. You've never seen a trend continue creates continued sell pressure or buy pressure. In this case, we are seeing continued sell pressure to the downside. You thought it was over? No, after 2 years, we are almost back. We're already very much 75% of the way back from where we were in 2020, right? Nested zones. And this is so crowded, man. Look at this, right? So price is in between a demand and a supply on governing time frame. And just to make our chart much more digestible, I'm going to start to delete some things. I mean, some of these things are the same color. Apologies, right? We want green for demand, yellow for supply, just so that our eyes don't play trick on us. If you like how I move in the markets, don't forget to check out the link down below. We are back, we're open. You can get immediate access to over, I think, 35 long 2-hour lectures on supply and demand, module 1, module 2. Bearing in mind that one day when everyone is serious about learning, module 3 and module 4 will be released as well. Right, so we've got supplies. I'm going to tighten this supplies here. So tighten this supply. This supply there, and you can see it did its part there. I'm going to make this yellow for supply, just so we have clarity. Once again, I appreciate all the live, the loyal soldiers. I appreciate everyone who checked up on me, everyone who wanted to check up on me, but wanted to give me space and was just thought about checking up on me. I appreciate you. I appreciate the 365 birthday messages in March, my birthday messages, during my time away. Thank you for caring. That was heartwarming. It made me realize that we definitely did build something. We did build a real community. That we're not just here for free signals, but there are genuine human beings that care. And by right that I am obligated to care for too. I thank you so much for that solid reminder in the type of humanity that I believe in, right? It was very inspiring. Eunice, Alvin, Ronald, Dr. Francis, and I don't I hate naming people because then I'll forget other people's names. Say Reed, like a lot of you did reach out at one point or another. I truly wholeheartedly appreciate that, right? So look at this now. This is the relationship that you have, right? This is not that exciting to trade unless you're like me and you're already in a sell, right? You remember AUDUSD were already selling, and we marked that sell last year in the war rooms because you're gonna have to wait for a good opportunity, right? This is what the weekly looks like, and you can sell the weekly has already breached this continued supply. I'm going to tighten this area just to help us see proper slightly neater. So supply tightened up. There we go. And our there's a nice demand here. It's nested within, and this is a 2022 demand that was a big reaction to the 2020 demand, or somewhere all the way down there, right? So this is the 2020 COVID demand, right? See, March 20. Look at this, March 2020, banks thinking in 3 months, take profit in 1 year. I don't remember which video we're doing together. I think it was maybe I don't know, maybe USD ZAR or USD Swiss franc or something where I was trying to emphasize this. Let me really break this thing down. Banks think in 3 months, they create a trend, financial quarters, take profit in a year. So this is March of 2020. Let's go find March of 2021 and see if we can find profit taken. March, January, February, March. Look at that. Where this red arrow is, March 2021. Banks think in 3 months. Take profit after a year. So what happens when you start to take profit on your longs? You start to create a downtrend. Because you're closing your longs. Okay, now what happens from March 2021 to last year, March 2022? This is where March 2022 is, right? And you can see there's a zigzag, so there's some retracement flow. And then it continues again from March 2022 to March 2023. Where is March 20? Tell me you can't see the turning points being created. You can. I know, blah, 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 November, January, December, blah, 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 blah. There's March 2023. There, leaving as supply. All right. So we've got March 22 here that went all the way down, and March 2023 is at this supply. I told you taking profits creates retracements. Well, let's figure it out. There, January, February, March, April. Let's figure it out. There we are here. Let's draw a Fibonacci, downward Fibonacci, to prove it in a different way. This is the latest swing high, swing low at that time, right? All the way there. Boom. Market start to retrace. Surprisingly, in March, January, February, March, there's March there. February, March. Look, let me zoom in. Let me zoom in. I don't want them to say I made it up. I don't want them to say I made it up. Look, I'm talking to you like you're on the golden ratio 50%. This is a killer zone. Inside a governing supply, inside a monthly supply, inside a presidential 3-month supply. You telling me this is random? Nah, bro. If you still believe that, hit the link down below so we can teach you. But here's the month of March. That's February, March. Look at that. Gone. March gone. Creating a new supply. There's March down here. March gone. Into this PCP area where price keeps getting rejected, right? So this is not something that I keep announcing for the sake of announcing or for the fun of it. I'm actually trying to embed a sequence so that when you understand these long-term picture trades, you understand what's creating your trends on the smaller time frames, right? Or I'm almost out of time, already past the 20 minutes mark. Let me shut up and stay focused. But I really hope this has helped you, right? So there we go. There we break structure, blah, blah, blah. But like I said, this weekly supply is slightly in trouble because it's been popped, right? So markets are pushed to the upside. And then finally, we get to the daily where I am right now. Remember, I told you I have locked profits here because I started selling up there. And all of you should have, because we marked those supplies out last year together in the war rooms. Some of you are not even disciplined. You come for war rooms, but you're not disciplined with your trading. You're not marking out your clusters correctly. Some of it might be, we can say, yeah, you didn't know. You didn't know which trade pending orders to delete, when to expire. Some of you don't have a lot of capital, to hold multiple pending orders at the same time. But those of you who are just not taking heed, taking notes, that's a very dangerous game, because your mind does not understand the benefit of why you sit down for hours watching these videos. And if you keep teaching your mind that what you're doing is poor effort, by the way, you're sitting down watching videos, but you're doing nothing about those videos, and your mind is recording this as wasted effort, which is why your trading psychology will always be affected, right? The brain is not stupid. The brain moves according to pain or dopamine. It chases those highs. The pain, the highness coming from pain tells the brain to flight or flee. The highness that comes from dopamine reaction, that reward-seeking behavior, it tells the brain, keep doing that thing, it's beneficial. If you keep attending war rooms, but you're not being articulate in your trading, in your planning, in your execution, you're not feeding your brain that information that this was worth your time. And so what happens is you start to get this trading funk, and then you fall into a specific tilt of unsurety and uncertainty. That is trading psychology, which tells you that actually you're not that confident. How long have you been trading again and you're not yet a millionaire? How many courses have you paid for and you haven't made any money? And when you focus on that kind of stuff for very long, because of your habits are the problem as a trader. What happens is 9 out of 10 times as traders, you start to over risk, you start to blow accounts, you start to jump and move from something else because you failed to master this. Which is why I always tell people, if I tell you, number one, if you join my academy, the first book you need to read is The Disciplined Trader. Not being able to finish the book, The Disciplined Trader, is the most ironic thing, because it means you're not disciplined enough to read a book about discipline. Why on earth would you be a successful trader, right? Let's get this right, guys. Let's get this right. I can't be begging you to make money for you. I don't trade for you. Remember that. There's no need for anyone your money. No one pretend to want your money. We don't trade. We don't do account management. This is it. If you want me, I am here on YouTube on a public platform. Simple. Transparency. Use the comment section down below. I don't want your money. I do want your attention. All right, in two ways: listening now and doing. And if you want much more detailed, longer versions of these teachings, join the course. Simple. Right, so prices move to a daily supply. We know that this weekly supply is in trouble, but price is kind of like settled on a daily supply. What we want, what I want, and those of you inside this trade still with me from up here, please lock profits, because anything can go. Anything can go. The reason why I started to lock profits was because the weekly supply was taken out. What we really want to see next week, and I'm saying next week, today is the 14th of April, as I make a series of these recordings for you to be ready throughout the weekend, is we really would like to see something like this, right? And then, yeah, we can take profit. Remember, this is where I said I want to take profit. And then for those of you who really want to buy this asset, and this is where you want to take some good risks. I don't know yet if I'm a buyer, but this would be a good place to start buying, only because this is a nested demand zone in a nested weekly zone in a nested monthly zone, blah, blah, blah. But remember, this daily demand zone is slightly above a zone that was used, right? So price does like to take lower demands. So be very risk averse there, right? So 365 AUD USD, pulse on the heartbeat. Make notes about it. And if you like this video, I apologize for the rant, but come on, man, I'm so, what I want out of this, that's why I don't sell signals. I don't have a signal group where I'm selling. I will start the crypto one that we spoke about last year a little bit later on when I'm really back in. But what I really want is to impact lives. And for you to say 365 did that for me, that's what I'm after. I'm not after your money, but I am after legacy. I am after keeping account. Okay, we've created 112 six-figure traders. I like that stuff. That's digitally speaking, that then I know that 106 traders represent 106 families across the world. If there are 4 or 5 members of that family benefiting, then approximately speaking, to date, I've changed about 1,000 people's life, and my target is 10,000. And if I can get to 10,000 people, it means I'll have created 365 six-figure traders. The day I do that, I get to shut down and walk away, because that was my dream, or my mission has been met. If you're a part of that, if you want to be a part of that, then I'll see you in the next video. 365. Peace.